Hello traders, Gary Wagner here at just before 1 o'clock in Honolulu, 7 o'clock in New York. It is Tuesday, 18th day of August 2020, and this is the daily report for gold and silver. A nice gain in gold today, gaining about $10 and moving well above $2,000. A minor move in silver, although to the upside, wasn't a great gain on the day. Nonetheless, we saw the precious metals move to the upside, and we saw more downside pressure in the US dollar giving up about 0.6%. We'll talk about our upside targets in both gold and silver, talk about a couple of scenarios and models, but first, let's take a look at pricing today. We are recording the prices after 12 noon in Honolulu, which means we are now effectively trading in Australia. Gold in New York closed up a little bit over $10, about $11, and it is currently tracking at $2,011.50. We have moved back above that key psychological level. Spot gold has not closed yet, and that is at $2,002, $2,003. When we look at silver, silver is down about 22 cents, but was higher on the day. And most importantly, we had tremendous dollar weakness, currently down about 0.6% at 92.29. Let's take a look at our charts and technical studies. As you know, we are long gold and silver futures. We are long gold Forex, spot gold. We are also long the ETFs, SLV and GLD. The first chart that we're going to look at is going to give us an idea of our upward projection long term, but then I want to put a caveat into what we could see short term in just 1 second. In essence, what we've been doing is just using a simple 61.8% retracement of this long rally. We're labeling this a wave 3. An extremely shallow correction comes in at about 23%. And then from there, what we want to do is do an extension of that long wave and do that to determine where we believe the market could end up. And I'm looking at October, November, possibly as late as December. We'll have to compress it. The 0.618% retracement, as you can see, comes in at about $2,269. Call it $2,270. Now, it could go a little bit higher, but this is my initial target to get there. However, before we do, we are in a fifth wave scenario. A fifth wave scenario will not go straight up typically, rather it will stair step, a series of steps, 1, 2, 3, 4, and then a final wave. Now, in each of these waves, what we do get is we get a fractal nature. So if we look at, for example, a corrective wave like is right here, we want to plot where that could actually go to. And to that effect, I'm going to go ahead and pull up a daily chart that looks at that potential. And I've just gone ahead and put that chart up on the screen because what we have to ascertain is we know we had a dynamic and rally to the upside. We also know we had a very shallow correction. But the question is, was this short correction a one and done scenario, meaning it's over and we are now within a fifth wave? Because there is another distinct possibility, and that is that we've concluded our third wave and we are in a fourth wave, but that fourth wave will be divided into a subcount of something like an A, a B, and then a C. The C could be a flat, meaning it would have an equal low to A, or it could actually go below that. We won't really have an idea of how this pans out until we get a little bit higher, because typically what we look for on our B wave in a correction is for the market to move anywhere between 75 and 78% of the move down. That puts us at 2,042. We've obviously broken that before. If we see the market continue to track higher and go straight through this area, the likelihood is it's a very shallow and quick correction. If in fact we see any kind of weakness come in, once we hit around 2040, that might be time to pull profits. We're in at 1955. We have exceptional profits right now. So we want to see how the market reacts if and when it continues to go higher. And my belief is that we will see higher pricing ahead. So traders, we're looking at a silver chart. In order to get different price points in there, meaning various tops that we have seen the market trade to, such as here, as well as $30, which is the current high right here, I really had to convert it into a 2-week chart. Every candlestick represents 2 weeks. Obviously, we are at a area in which we have found real resistance, and that resistance comes in at around $30. However, I do expect that particular area to get taken out, especially if we continue to see gold track higher. And so the first thing that we want to see is an effective close above $30. However, the next target doesn't come in till about $35, and we have significant data to suggest that this could be definitely an area of potential resistance, coming in at about $35. These are not fib based, but rather based on a series of tops. Lastly, at about 37.5, we get this one real nice spike, and that would be our next level of resistance, and I believe major resistance, because above that we're into 42, and then of course the all-time record high, which comes in at around $50 per ounce. Traders, my recommendation is to maintain your long silver futures position. And lastly, a quick look at the GLD and SLV electronically traded funds. We entered at 183.57. We are currently at 188.18. We will look to add a stop, but we are waiting to see where this market wants to go and if it can challenge 190 once again. Lastly, I do want to look at SLV. We entered at $25.01 per share. It is currently at $25.88. We do have a potential area, at least on a technical basis, of some resistance that comes in right along these bottoms right here. You can see that. You can also see a gap that came in. That gap has been filled. In terms of my upside target and potential, I believe we could see over time this particular electronically traded fund go to approximately $34 per share. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.